Okay. Hello. Good morning. Good afternoon. Good evening. We are starting. We're trying this new format. It's a live stream format here with Eightcap. This is Ashraf Laidi, and welcome to this live stream with Eightcap Trade Zone. We're going to speak around 20 minutes. Just do a quick update here in the markets. I know many of you people are now celebrating Thanksgiving, even if they're outside the United States. So happy Thanksgiving to those who are celebrating and who are not celebrating, who are just shopping. And those of you who are getting ready to go to bed in the Pacific, and those who are wide awake in the middle of the world, in the center, in Middle East or in Europe. Um, I hope you're enjoying the series of videos that I do on Mondays and Wednesdays, or Mondays and Thursdays. But let's just get right to it right now. The markets, as we speak today, some trading platforms are closed because of Thanksgiving. But the markets, but FX and gold are open, especially this time of speak about. Okay, so the seasonality. This is one of the best times. They say for equity indices, but it's actually a very good time for Bitcoin. Okay, so I'll just mention Bitcoin here briefly, but I want to do an update for this for what's going on in copper. I'll call it the intermetals count, which is basically on top here is copper, and the yellow is gold, the white is platinum, and the bottom white here is silver. Okay, and just to give you a 10-15 second summary of what this chart tells you, then I'll tell you this what I interpret from this chart. What I interpret from this chart is basically the lows and the highs, especially the lows in copper, in silver, in platinum, they precede the lows and highs in gold. So before we speak about the present, we speak about the past. And the past, if we go of gold, of so if I'm going to enlarge this window here, this middle window, okay, and I'll go to the November lows, meaning from November last year in gold, okay, the yellow. So if we go here in September 22 here, you will see there is a low here in the yellow, but in the white, which is platinum, that is of a metal's low preceding gold, but it's also in the case of copper, and copper is on top. And you can see here low, and then we had a higher low and a higher low. But the first low in copper, okay, did happen with gold, but this was the lowest low in copper, but it was not in gold. But even though gold did put a lower low, it was close to stabilizing. And that is very important for those people who are saying, oh, okay, that's fine. Silver is stabilized, has reached a low, is not going to break to a new low. Copper is not going to break to a new low, but my trading account in gold is telling me that I'm losing money. So many people will try to make a choice, and they say, okay, I don't care about the other metals. Gold is reaching my stop, is about to margin my account. Should I get out? And when I give you this analysis, and you know that the lows have been seen in other metals, this is the kind of analysis that will tell you, okay, we are actually not far from the low and not far from a recovery in gold. And he makes a difference between those who says, okay, I'm going to capitulate, I'm going to throw in the towel, and making the difference between saying I'm going to throw the towel, that's it, and between saying, oh, I may need to throw the towel, but no, we are at the low. And as you know, many of you have been in a situation where when you stopped funding your account, or when you stopped when you decided um, to get out of a position, that's when the market turned around. And this is one situation. But so I gave you the example of copper. I gave you the example of platinum. But more importantly is silver. Okay? And silver here, as you can see, again, the low in July, they had a low, but the lower low in silver was in August 2022. August. Whereas gold continued to fall and then it didn't rally, it didn't stabilize until 2 months later. Why am I talking about the past? Because it serves us as a reference for the present. And the present, here's what's important. So in this case, it's a bit different, but in this case, the low in gold happened approximately at the same time as platinum and as silver and as copper. But more importantly is the breakouts. There's a key breakout here in copper, which already happened while gold is not known, is not seen, is not considered to be breaking out because it's still testing those key lows 2000, 2020. And gold is not deemed to be breaking out until it goes above 2060 or 2070. Okay? So what is important is that as far as a trend line resistance, so if I'm going to put numbers on a piece of paper, if I'm going to put numbers on a piece of paper, what you can, okay, yeah, so basically, so what we can do here is that if we can put numbers on a paper, let me just turn this off. Yeah. If we can put numbers on paper, if you are trading gold and you're waiting for a sort of a reference of when is this really going to be the rally that is going to take us back to 2040 and 50, one of the references is this, is silver. Okay, silver. If you see silver breaking this, if you see silver breaking this trendline resistance, i.e., if it breaks above 24, or let's say if you see a print of two consecutive daily prints at 24 or more, then that is crucial and that is important and that is positive. Are we clear? Are we clear? Okay. All right. For those of you who are members of my WhatsApp broadcast group, please send me a message on the WhatsApp broadcast group to tell me whether, whether you are around or not. Okay. Now, so again, so if you see the in silver, yeah. Okay. So again, so if you see here, silver, once we break above, if we see a print of 2390.24, then that is a great point of reference for us to push higher in gold. Okay. Now, something else that I mentioned, and I covered this in I have a YouTube channel, and I covered this in a video short 2 days ago here. And the explanation is here. It's a 1 minute video. So I'm going to go over this now. Okay. And the summary here for gold is a slight lag in this cast, in this live stream. So please be patient with me. And I'm going to try to speak slowly. I don't know if it makes a difference. But what you need to pay attention to here is that I'm going to get rid of the averages, of the moving averages. And in the video that I did with gold, I called it the 10%, 38% special. I will say it again. I called it the 10%, 38% special, the 10% dash 38% special. And what does this mean? Is that if you look, and I noticed this, late September, early October. Are you ready? Are you ready? Okay, good. So here we are. So since 2019, there has been how many cases? One, two, three, four, five, six. Okay. Actually, seven, because there is another case here. Seven. This is another one here. And I'll tell you why is this useful for trading, and I'll tell you why. Okay. So let's get to it. In here, it tells you that when we reach a major low, we gain 10, after we reach a major low, we reach a gain of around 10 to 11%, 10 to 11%. And once we do that, we retrace 38%. And after we retrace 38, 34, 35, 39, over a third, if we retrace 38, but not more, we keep going on until we go up by another 5%. It happened here. It happened here. If you think it didn't happen here, well, let me just enlarge the picture. So this is another major low here. Okay. Again. Let's do it. Let's go to this episode here. And here, we reached the low. We rallied around, actually, this was a little bit more. This was around 12%. Then we came down and we retraced 38, and then we kept on going. So it happened the first time, successful. The second time, successful. And I said, a major low. So this is not a major low. And then we come down. This was the exception. What was the exception? We fell more, we retraced more than 38%. We kept on going. So this case did not work. In the third case, it worked beautifully here. You reach the low, you see this? You reach a low, you go up 9.7%, you retrace not more than 38%, and then you go up by at least another 5-6%. This is the third case. And the fourth case is spectacular. It's uncanny. Okay, why? Look at this. You go from this low, see this low here? Around 1780, January 22. You rally. This was around, this big jump here is on the Ukraine war. What happened? Look at this spike. You see this spike on this day, February 24th to 22? We rallied all the way, and the top of the spike was 10.6. Then we came down, retraced 38, and then we went up by another 7%. This is case number 4. And this other case, again, pay attention. It is happening. Then we had a low. So we had a low, we rallied less than 10%, and then we came down. We had a low, we rallied less than 4%, and then we came down. But then, listen to this. Yes, the stream is slow, but be patient through the noise, because this is valuable information. Well, at least I think so. You get to the low here, you rally. How much is this? I kid you not, 10.4%. 10.4%. You come down, we retrace barely 25%, and then we went home. And then we have it here. You cannot make this up. Okay? You go from here, 1809, you rally. How much do you rally? You rally 10.9%. Then you retrace less than 38%, and then you go up. Are you convinced? Is your brain nourished with this information or not? And now we go here. And what did we do? We went from 1810 to 2010. That is what you call 10.7%. We rallied, and then we retraced. We retraced 30%, and then we come in. So this means that we're going to go another 5%. So this means that we are likely, very likely to go to 2050, 2060. Okay? So this is what you call, ladies and gentlemen, an extension-based analysis, a price-based analysis. Now, let me try to give you a time-based analysis, a time-based analysis. And again, be careful, be wary, beware of analysts or experts or traders who try to tell you, who try to give you a price and try to give you a time analysis. It's very hard to do both. It's very hard, let alone to do one of them. So when I gave you the price analysis, so I said that we are likely to go to 2060. Now I'm going to try to give you the time analysis, and I have to say we have to be careful. This is not a trade. This is not a recommendation. This is something to keep in your left brain hemisphere, your right brain hemisphere. You bring them together, and you make your own conclusion. So let's go with this risky, ambitious thing called time-based analysis, where I'm trying to tell you how far we have left before we reach the cycle high, i.e., the local high, i.e., the temporary high. And ladies and gentlemen, the stuff that I was saying in those who have seen previous 8-cap trade zone videos that I have done on Mondays, what do? Hi, Mustafa. Good. Thanks for good to have you. Oh, hi, Amani. Good to have you. And Chris, excellent. Thanks. Great to have you guys. And again, so you guys are part of the WhatsApp group, so you're familiar with this, but let's just go there. So I gave you the price analysis. So let me give you now the time analysis. And what is interesting, so pay attention, please. If you go to the weekly chart, okay? This is a weekly chart of gold. Probably I'm going to be spending a lot of time in gold, but it's really worth it. It's really worth it. Or at least I think so. So if you count, so if you do the cycle time span, if you do the time span, ladies and gentlemen, if you go from here to here, how many is this? This is 12, okay? You get the picture. So, ladies and gentlemen, and actually, this is not only this, but if you do this too, time, yeah, this is going to be time span. And if you go from this low to this high, what is this? 10. So this is 10. From this low to this high, it's 10 weeks, okay? And then you go here, okay? From this low, do you see the vertical line? It's 12 weeks. Then if you do the same exercise, time span, what do? I don't have the analysis. I'm doing it live with you, so, but let's just do this. From here to here, how much is this? 13, yeah. So it's 13, so it's 13 weeks. Are you ready? So, and if we go from here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is also 12. From this low to this low is 12. Okay? Now, pay attention, please. So let me just do that one too, time span. So if we do from here, from this low to this high, I think this is going to be 13. It's 13. Do you get the picture? The average low to high duration in gold is 11 to 13 weeks. Okay? Capisce, as they say in Italian? Now, let's calculate the current one, time span. Here we are. This is, you don't need to do the time span, you can just count them. From here until here is how many? And again, if you thought this was going to be one of those boring live streams in the middle of Thanksgiving that is not going to teach you anything new, I hope this teaches you something new. This is 7. Do you see what it says here? 7. Siete. Sab'a. Set. Sette. How do you say it in Japanese? üç nü sam şey go roko chichi chichi chichi. Okay. So basically, if this tells you that the average duration from low to a high is 12 weeks, and now we are 7 week, that means the next high is going to be 4 to 5 weeks from now, which is basically 1 month from now, which means if we are right now the 23rd of November, so again, 1, 2, 3, 4, 5, 6, 7, 8. So plus four, so we are talking about either around the 17th, 18th, 19th of December. And as you know, if I'm going to go to the calendar, you will know that in December, okay, in December, you will see that the 13th of December is the Federal Reserve decision. So this means that gold is probably going to rally after the 17th. Okay, so it's going to rally after the 13th. Are we clear or not? Are we clear? Okay. So I hope this analysis is useful for you. So this means, ladies and gentlemen, why is this important and how do you use it for trading? That means that let's say tomorrow, the 24th of December, or let's say next week. Let's say next week, you wake up one day and you will see gold trading at 2030 or 2040, and you say, okay, that's it. I'm gonna lock in my gains, and I'm gonna short. I'm gonna short because I think this is the high. What this analysis tells you, whatever high we get, whether we get 2050 or 2070 next week or the following week, it is not going to be the cycle high. There's going to be further gains according to the time cycle of this rule. And this is a rule. It could be broken, it could fail this time, but this is what you need to have. Okay. So again, no matter what you see. Oh, and if something happens and gold comes in and it goes to 1950 or 1960, and you say, oh my God, this is it. The rally is over. Well, according to this analysis, the rally is not over. It will still have to go to a high. The high will not be seen, not the high, the ultimate high, but the cycle high will not be seen until 3 to 4 weeks from now. And what do I mean by cycle high? That means I'm not talking about the record high, the all-time high. I am saying that it's a local high. That means we will go higher, then we'll come down for 3, 4, 5 weeks and before we push higher. Is this clear? Is this clear, ladies and gentlemen? So I'm going to go to the stream link and I'm going to see if you have any questions. Bear with me, please. Bear with me. Okay, maybe because we may not have time, and Mr. Steven here is going to tell me, is going to ring the bell, is going to say, that's it, Ashraf, it's time to go for your Black Friday shopping. So he will say, no, 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 we need to go. I have to do some, you know. So let me do a few other things, which is the Aussie dollar. Okay. Let me see if there's any questions here. Chat. I don't see anything here. Maybe Stephen, if you see any questions, you can give them to me via the WhatsApp group. Okay, Stephen. Thank you. Yeah, Steve. If you see because I don't see the. Oh, I see them now. I see them. Okay, lovely. Okay, Colio. I hope the stream is good. Good. Gold, a good chance to go up till year end based on cycle. Yes, sir. Yes, Tommy. That is correct. That is correct, Tommy. Um, okay. Let me see if there's any other question. Yes. Okay. So Shane, any questions? Okay. All right. All right. So let's just continue. Okay. So basically, we made this. And so, once again, for those of you who joined late, okay, I did say, I'm not going to speak about the 10-year, I speak about it all the time, is that one of the reference points is silver. If you wake up one day, or maybe today or tomorrow, and you see silver is above 23.90 or above 24, and it has closed for at least 2 days around that level, then that is a very positive sign for gold. Okay. Uh, let's just go to the Aussie, and I know that Eightcap the analysts at Eightcap have done a lot of stuff on the Aussie, but basically, we told you in the previous video and through the WhatsApp broadcast group that we had a local high target of 65.90, and we hit that right on the dot. Okay, right on the dot. And if you remember, okay, 65.90, okay, and uh, and yeah, if you look at this, if you look at the camera here, I don't know if you can see this. So this is what's up broadcast group, and we targeted 65.80, 65.90. Okay, 65.90, and then we hit it, and then we came down. So we have a subsequent target, and the subsequent target is 66.50, 66.60. Okay, so 65.80, 66 was obviously the 200-day moving average, but we targeted 65.80 because it was just below. Usually, when you're long and you want to buy something and you want to target, you basically target below the resistance or below the technical resistance or below the moving average. Something you want to target above the support. But this is the level I'm looking at. So we were talking about 65.90, which on the daily, but the weekly, look at this. This is the weekly chart, and you see the trend line. The trend line resistance tells you, with the purple, with the purple line there, the purple moving average, that is the 55 week. Okay, so I'm going to solidify this line here so you don't get confused. That this line here is 66.55. So 65.55 moving average. Okay. But there is more room according to the trend line resistance around 66.60. So you're trying